Joining us to discuss is Jonathan Matuszewski, Chief Equity Analyst at Jefferies. Jonathan, I hope I got your last name right. If not, you're just going to be Jonathan. I hope that's all right.
Great job. Thanks for having me.
Thank you, man. What did you study and what did you find?
Sure. So, this is the second chapter in our work on the topic of ESG. We were initially seeing a lot of investor interest on environmental sustainability. And now we're seeing a lot of interest from investors asking about workforce diversity. And so what we did was we took a look at all of our companies in the home industry and we benchmarked them across managerial, board level, and workforce diversity. And we saw some winners and we saw others who are catching up. And we also saw actually an interesting relationship between the workforce diversity of companies and the stock returns and multiple expansion over a multi-year basis.
So we set aside for now the idea of environment and sustainability in this study, and we're looking really at board composition, executive composition, workforce composition. Which one of those three were most associated with outperformance or above trend performance?
Yeah, so that would be workforce diversity. And the way we framed diversity was either having representation from females in the employee population or employees who are part of an underrepresented racial or ethnic group. And so what we saw was a pretty nice correlation between companies that had a higher representation from diverse candidates in their workforce and stock returns. And you can see that, for example, with a company like RH, the stock is up over 600% the past few years. It has one of the leading ratios in terms of females and underrepresented minorities in their workforce. So I think that's a classic example there. Obviously, other things impacting stock performance over a multi-year basis, but really workforce diversity was what we saw as the driver of performance.
Let me get two more quick ones in. You say that public companies can learn from what private companies have done. What did you see there?
Yeah, so obviously we're seeing ESG investors push their public companies to disclose more, right? We're seeing that in proxy season thus far, where the number of inquiries into diversity and racial equity audits are up significantly year over year. But we're also seeing it on the private side. Great examples are companies like Brooklinen in the DTC space. And we're seeing basically them disclosing more statistics than some of their publicly traded peers are. A company like Parachute Home, for example, they're reallocating their influencer budgeting for social media towards more diverse influencers. And so they're doing interesting things that I think public companies are going to be doing more of going forward.
Shepard Smith here. Thanks for watching CNBC on YouTube.